Hello, I just wanted to give you a quick update and a bit of a summary from last week's budget. So on the 3rd of March, our Chancellor delivered the budget, and we have a link in the comments to more information about that, and also a little pack that we've prepared for everybody. But some of the highlights that are affecting our clientele are, of course, the extension of the coronavirus job retention scheme, furlough, until the end of September 2021, and also extending the self-employed income support scheme as well. So there's going to be a 4th and 5th grant. I'll go into those in more detail later, but the other highlights really are the change of rate to corporation tax. So that rate will increase from April 2023 to 25% on profits over £250,000. So the rate for smaller profits under £50,000 will remain at 19%, and there'll be relief for businesses with profits under £250,000 in a tapered way, so that they pay less than the main rate. So that's the main thing for corporation tax. The other couple of things on VAT, so the reduction for the UK's tourism and hospitality sector, the VAT was reduced to 5%. That will extend till the end of September 21, at which point there'll then be a tapered approach back to the standard rate. So to help businesses manage that transition, a 12.5% rate will apply for the subsequent 6 months up until the 31st of March 2022. There's also for VAT a due deferral payment scheme in place. So businesses with deferred VAT can now pay in monthly instalments from March, interest free, and depending on when they sign up to the scheme, they can get between 2 and 11 monthly payments. So that's something to look out for as well. Just a point on that is agents cannot see, on behalf of clients, they cannot see the payments made or what's outstanding for VAT. We only have access to what the return contains and so on. So it's something that's very heavily much on the client to maintain. Another thing is the extended loss carryback. So if you're a company and you have been pushed into a loss-making position, then you can carry those losses back now for up to 3 years rather than the standard one that was allowed before. One which has caused a little bit of discussion and interest as well is the 130% super deduction for main rate assets. So this is basically for any expenditure incurred from the 1st of April 2021 until the end of March 23. Companies, limited companies, can claim 130% capital allowances on qualifying plant and machinery costs, and it's basically to encourage investments. So under that super deduction, for every £1 a company spends and invests, their taxes are cut by 25p. There are some tax rate changes as expected. The personal allowance and higher rate threshold has changed ever so slightly. So from April, it will go up to £12,570. That's an increase of £70, and will remain at this level until April 26. And the higher tax threshold will rise as planned to £50,270 from April 21, and will remain at that also until 2026. So the other points really are around the extension of the coronavirus job retention scheme and the self-employed income support scheme. And as I say, there's a wee bit more detail to that, so I'll do a separate video on that for you later.